Welcome to Reverse Mortgage Weekly. I'm Bill Gross, and I'm a specialist in probate real estate, which means I get involved in estate planning or the lack of planning in probate. And one of the tools of the trade is and should more often be reverse mortgages. I'm always surprised how customers haven't considered them, how attorneys I work with haven't considered them. They're such important tools. I don't do them. I'm not looking for any commission or referral fees. I am looking to educate the people I work with. So we've launched this podcast, Reverse Mortgage Podcast, to talk to the best practitioners across the country to help dispel the myths and lay out the opportunities for people to use this, which I would say is an important tool for the right person. Could be bad for the wrong person, but it's certainly right for the right person. Today, we're excited to have with us Angela Wyckoff. Angela is a reverse mortgage specialist with Reverse Loan Solutions out of Simi Valley, Thousand Oaks area, lives in one, works at the other. Angela, thanks so much for joining us today.
Thank you so much for having me, Bill.
So let's talk about your business to begin with. You know, I always find that every loan officer will tell me they do reverse mortgages. And I say, well, when's the last time you did one? And you know, if they're doing purchase loans and FHA and VA, hard to know enough to give customers the confidence to do reverse mortgage. I know you're a specialist. What prompted you to become a specialist in this particular niche?
So to go way back, when I was 13, I was living in my grandmother's home, and she was the sole caregiver for my great-grandmother. So there was 4 generations in one home. And
Wow.
I just watched her painfully struggle to care for my great-grandmother. And, you know, I'd come in and help after school or what have you. And it was just really hard for her. She got to the point where she had to put her in a convalescent home. I don't think they call them that now, but, you know, I've always remembered that. And the thought of knowing what I do now, her end of life care would have been dramatically different. So
Yeah.
I've always had a passion for seniors and, you know, trying to help them as my parents age. And, you know, my mother-in-law fell over her dog and laid on the floor for 4 hours. She was on her way to the restroom, and, you know, paramedics had to break in her door. And I looked at my husband and I was like, we cannot physically nor financially care for her when she needs, you know, care. So we put her in a reverse mortgage on her free and clear property. Now she has access to a line of credit for when she needs to pay for care. And, you know, don't use it and let it grow, or use it when you need it. So, you know, it's a really amazing retirement tool. It truly, truly is.
And I think I might modify it. It's just like you say, it can be for the right people. And unfortunately, in my experience, not enough of the right people even know about it to consider it properly. And I think the thing that you said that really resonates with me is that their quality of care at the end of their life can be so much better, but they're leaving this tremendous asset kind of locked up. So let's talk about kind of the myths of reverse mortgages. One of my favorite topics, and I know you mentioned one of your favorite topics. What are the most common misconceptions about reverse mortgages?
Well, the most common is that the bank owns the home, and that is not true. You retain ownership to the property. I highly recommend that you put it into a trust. Never deed your property to your children. That will cause tax headaches once you're gone. The other thing is that there's nothing left for the heirs, and that's quite the contrary. You know, I've got 3 children in private school, and I know that there is a safety net on grandma's home so that when she does pass, there is still something left for the family. You know, in some cases, you know, if you live a long time and you choose to age in place, you can eat away at the equity, but, you know, you're using your hard-earned equity to stay in the home that you love and know. You know, so those are 2 of the strongest myths. Others are, they're so expensive. Well, it's not that they're expensive. It's that there's fees associated with them, just like when you buy a car, just like when you buy anything, you pay a fee to do that. And the fee is imposed by the FHA. So these are FHA insured mortgages. You can never owe more than the property is worth. And then if you do end up, if your loan balance exceeds the value at the time that your family is ready to, you know, sell or refinance, the lender does give you an opportunity to purchase the property at 95% of market value. So let's say the market value is $800,000, and based off the loan that was taken out, now the parent owes, $1 million on it, and now they're going into a home, but you want to retain the family residence, the heirs can purchase it at 95% of the market value, assuming they're not on title. So putting that property in a trust is a huge, huge benefit.
Well, you covered a lot there. And I think, one of the things, like you say, it's more expensive than some loans, less than others. It's priced for what you get out of it. Therefore, there's certain risks the lender is giving you, one of which is if the property goes down in value, or the loan balance goes up faster than the equity, the lender is taking all the risk of any shortfall,
Yep.
unlike other mortgages. And so that's one of the primary benefits. It's not a negative. The bank does the bank not own the property. If the bank owns the property, it means you got all your money out and then some, and you get to walk away. I don't say scot-free, but you get to walk away without any recourse. I think that's important for people to know.
True. Very true.
Go ahead. You can say something. I cut you off.
Oh, I was going to say, we've all been there, during the mortgage meltdown of 2007, 2008. And the happiest people on the block were the people that had a reverse mortgage with a line of credit, because everyone else's got turned off, but not theirs. So just know that, if there is something else that happens, these are FHA insured loans. You will not lose access to your money unless you don't follow the rules.
Now, there's two primary types of products. There's loans where you take the money out, and there's lines of credit where you can have a certain amount pre-approved and access it as you need it. Maybe you want to pay monthly for your caregiver or service or whatever that might be. And so you have a line of credit set up to accommodate that. So how would you describe the product that people aren't aware of that you want to kind of make them aware of? What is the feature or product aspect of the reverse mortgage that people should be taking more opportunity to take a look at?
So the aspect is this is fully customizable. You can take a lump sum, you can take a monthly draw, you can access a line of credit, you can do a little bit of all three. So, it's customized specifically to you. There are no two reverse mortgages that are alike. So some people will say, you know what, I need $50,000 to make some repairs around the home, and then I'd like $1,000 a month to help, pay for my long-term care policy or what have you. I've pretty much seen it all. And I would like to eventually go back to what you were talking about any loan officer doing reverse mortgage, because I love that topic too. But yeah, the most important thing to know is that it's customizable and that you are in control. So if you decide, you know what, I just want the line of credit, I just want it there available for when I use it, you're not going to pay interest on the unused portion. So, and it will continue to grow as it sits there. Most times within a 10-year period, if you just set it and forget it, in 10 years, the amount of the line of credit can double.
I also think about on one hand, people say, well, it's expensive because you're borrowing money. A line of credit is, by its nature, riskier to the lender than a regular loan. But, you also only use it as appropriate. Like, so for example, maybe you have you have taxes that are due, and you're going to be selling a property to pay the taxes, but the property isn't ready to close yet. Rather than rush the close or cut the price to a part you don't need, you can access the line of credit and pay the taxes and then repay the loan out of the proceeds later. It gives you some flexibility that can become very valuable. So again, that's where it becomes kind of a tool in planning. It's interesting, Angela, that I don't see this topic discussed as much with estate planners as I think it should. I find estate planners are very focused on liquid assets, putting money into stocks and bonds and those things. And those are important tools as well. And kind of taking people out of being over encumbered in real estate, if there's such a thing. But it just seems to me that at a minimum, if you have a residence that's paid free and clear, you should have the line of credit on it. Why not? I mean, it's such a valuable tool. Why do you think it is that, and my goal here is to expose us to estate planners as well as to get originators to talk to their estate planners. Why is it you think it's not more commonly involved with estate planning, and what can we do to help move that forward?
So the reason is because a lot of people in the past had taken advantage of the situation. They said, oh,
Yes.
yeah, let's just take, X amount out of your property and we'll put it in this catalyst. And then, of course, the borrower ended up losing a portion of that. So it really got a negative connotation with that. And so
Yeah.
now financial planners just really try to stay away from it. Now,
Yes.
there is, an item on the application that says, are you distributing this for that purpose? So it
Right.
does need to be disclosed that, yeah, my intention is to take this money out, but we don't want to equity strip either. So, it's really, really important to take a very intentional approach when talking about, estate planning and using the equity in the home that they want to stay in.
I remember I've been in the mortgage business since 1986. So when these reverse mortgages first came out, they were abused, where people who were in the estate planning business, they would get paid money as consultants. They got commissions on the stocks and bonds. They would do a reverse mortgage and take out, $400,000 or $500,000, buy an annuity, get a 5% commission on that, flip this, the securities over every 6 months or so for more commission dollars, and watch the net equity of the customer go down. And so there was a lot of abuse, and there are certain rules put in place to disclose that ahead of time and to penalize and restrict it. I'm sure it still goes on. I'm sure there's still abuse, but it's not like it was this year. And that's why it has
changed in the last 15 years.
Talk about that. What's changed?
Correct. So in the last 15 years, there have been so many changes to help make this product safer. And I highly recommend that any financial planner reach out to me or any other, reverse mortgage professional and just ask questions. Say, I have a borrower in this particular situation. What does that look like? It takes no time at all to come up with, a plan and to fully customize it for your client. And so that you can see the pros, the cons, the speed bumps along the way. But there's a lot of people that are, I've talked to people where they choose to feed their cat instead of themselves. They live in their car and rent out their house because they can't afford it. There's so very many situations. I could go on and on and on, but leveraging the equity in your home to stay in your home is what people need to do, essentially. Don't struggle when you don't have to.
In addition, I think the bad rap from the original reverse mortgage implementations, there's a bad rap where mom or dad have reverse mortgage and pass, and the kids live in the house hoping to live there for free because there's no mortgage payment. Maybe they pay the taxes, maybe they pay the insurance, maybe they don't. And then all of a sudden, after 6 months, they get the magic letter, hey, we know mom and dad died and we're going to foreclose on the property. And so they think of the reverse mortgage as being bad as a result of that. You mentioned about putting the reverse mortgage in the trust, which at least begins the process of avoiding probate. It doesn't eliminate the need to sell the property or refinance it or deal with it in some way. But sometimes the heirs just aren't equipped to live for free in the house forever. Have you ever had customers like that come to you and call you after that process starts? And what's your best advice?
I actually have a client going through this right now where their mom passed away recently and their intention is to live in the property. They do know that the reverse mortgage must be paid. So they're taking a loan out to pay off that reverse mortgage. Unfortunately, mom still has, equity in the property. Of course, there's siblings involved too. But it's so important to keep the lender informed on your intention. So, for instance, there's a problem with somebody who, maybe was a hoarder and they need time to fix up the property before they sell it. Reach out to the lender. Let them know your intention. If your intention is to buy the property, if your intention is to sell the property, they will give you, a 6-month leeway. And then oftentimes they can extend it for a maximum of another 6 months. So just stay in communication with the lender. There's a monthly statement that comes, so you don't have to go digging for paperwork. Just wait for the statement to come and then call the lender and let them know.
And I think it's so important that you mentioned early on that the property has to be put into a trust to give you more flexibility. Because if you don't, you can only sell the property by going through probate, which creates more cost and time and limitations versus if you have the property and it's in a trust, you don't need the court to approve. Now, you might need some approval of errors depending on how the trust is written. You may not, but it gives you a lot more options on how to sell the property, when to sell the property. Maybe sell it and carry back paper. Maybe sell it and get some lump sum up front to move out. You can't do that in probate. And so it's so important.
Exactly.
And one of my reasons for doing this podcast is to reach out to reverse mortgage originators to say, you got to get your customers to put the property in a trust. Otherwise, they have to dispose of it through probate. And they made the difficult job of disposal 100 times harder and more expensive than it really needs to be. So that's really one of my pet projects of this, to do that, is to get people on that. So there you go. Okay, so let's talk about, go back to the topic I know you want to talk about, and I do as well, which is what's the difference on working with a reverse mortgage specialist versus, I literally got a business card today from some guy, and he had like so many types of mortgages on his business card. I don't remember any of them because I think of him and this business card with all these words on it versus I talked to Angela and I'm going to think about reverse mortgages. It doesn't mean you might not do other mortgages. I don't know. We don't even need to talk about that. But talk about the difference and what do you bring to the table for people who come to you for advice in these areas?
So I had to go through a rigorous educational process because these loans are so unique and they need to be tailored to the individual client. I also have a huge problem with loan officers that just can say, oh yeah, I do reverse mortgages, because all they're looking at is dollar signs.
Mm-hmm.
There are potential for reverse mortgage originators to make a lot of money, but you need to do it in the best way for the client. So not to line your pockets, but to help the client have a sustainable loan. That is super important. Any licensed loan officer can do a reverse mortgage, but should they? Not really. You got to make sure that their heart's in the right place, their mind's in the right place, that they're educated. I've had people on the verge of foreclosure and a reverse mortgage came to the rescue. So, it really helped them stay in their home, even though they were in the foreclosure process. Not a lot of people know that that's a possibility. So, just keeping up to date on the guidelines and just the different nuances is super important. That's my primary function because of how passionate I am about helping seniors. And, I'm constantly talking to people and I'm like, wow, this could be a great fit for you. And some people just, the second you say the word reverse mortgage, they shut down. And that's okay too. Some people, it took 4 years for them to actually go through with it, and they could have had almost, 50% more in their line of credit. But, I'm not a pushy person. I make sure that people understand the type of loan that they're taking, the way to best structure it, the way to best access the funds. I just really try and work with the person. I at the end of the day, my commission is a second afterthought. It's not the primary focus, which unfortunately can be. Especially, the rates have been higher. People have, been making less money and they're more concerned with the bottom line than helping the person.
Yeah. Yeah, and I think I'm in the same boat that you are in that, I'm a real estate agent in the probate space, and there's so many real estate agents that are probate experts because they bought data and they cold call people to get leads, and they've done a couple. And there's nothing wrong with, we all were new in the business at some point and working at it, but I think that certain things are more technical and do require more handholding, and you need to have a mentor perhaps to get started properly in those areas. I know for me, like I said, this is an area where reverse mortgages are great, but if you're going to do it the pro, get the right customized solution. And again, I just can't say often enough, get it in a trust, because at some point, reverse mortgage, the borrower is going to pass, and then what are you going to do and how are you going to do it? And unless you have the ability to write a check and pay it off, or you're qualified to just refinance it yourself, most people need to sell the property or something like that, and the trust will make it a lot simpler to do. So, Angela, I really appreciate the time with us today, and just I saw you online and just thought you really had a nice perspective. I want to share that. You are Angela Wyckoff is a loan originator with Reverse Loan Solutions. and we'll have her link to her contact page down below. There's a phone number, 805-301-1933. You can also email her at angela.wyckoff@reverseloansolutions.com. That's a mouthful. Or you can just click on the button, get a quote there, and she's got a cute little video of her there as well, and love to see her in action. And then just a reminder, this is the Reverse Mortgage Podcast, where we talk to successful and experts in reverse mortgages across the country about how to use this tool to help our customers get better outcomes and avoid both, being house rich and cash poor, and having liabilities and having to make short-term or expensive decisions, where the reverse mortgage can be kind of the lubrication to that transition to make it work. So, Angela, any last words? What would you say somebody who's trying to build their business in this field of reverse mortgages? What would your charge to them be, or what advice would you give them to be more successful?
Just have conversations. Just be approachable. Have conversations. Don't go in with an ask. Just always try and be a resource and helpful to other people. I did create a website, ilovereverse.com. It's a portal in which seniors can go to just access the information or answer the questions that they're too scared to ask. There's no obligation. It doesn't track your information, and nobody's going to call you. You initiate any contact. But if you go there, there's various subjects that you can learn about, that you can, find out more about. There's other resources on there if you need in-home care. I just provided, an outlet where people can go and take a look and, again, hide behind the screen and find the answers that they're looking for, and then decide to make that connection.
Wow. So ilovereverse.com, which brings you to this wealth of information. Thanks for sharing that. It would not be complete without that. And I mean, I had to scroll down quite a bit to get, I don't know how it shows on the screen here, but we're going deep with different resources. So, Angela, thank you so much for that. And thank you for your time. I really appreciate it. Like I said, I know you come from a place of educating, giving, and I think it's really important as we refer people to various vendors that they be like-minded. And I think I feel very comfortable and will, I'm sure, induce people to you going forward. Angela, thank you for your time today. I appreciate it.
I appreciate it, Bill. You take care.